Well, everyone, thank you for joining our panel. I see everyone is here, so we can kick it off. So we're here to talk about investments in metaverse. So obviously, it's been a very easy year for all investors, no matter what you do. So it's fun to look back and see how fun it all was. But let's start with everyone introducing themselves. So we can go alphabetically. David, would you mind kicking us off and telling us about yourself?
Yeah, sure. Hey everyone, it's David here. So previously, I was leading global strategy and investments at Huobi, one of the larger exchanges based out of Asia. Now I run OP Crypto, which is an early stage venture fund focused on investing in really the application layer infrastructure and helping founders from most of the Western market to go to market in Asia.
Cool, thank you. Felix?
Everyone, Felix Hartmann here. I started my investment firm Hartmann Capital 5 years ago. Initially launched a liquid crypto hedge fund that's been running 5 years since. One of the best performing ones so far this year. We did number one according to Galaxy in July and October, and number two in August. Recently launched more relevant to this is the Metaverse Fund. We launched a Metaverse VC fund at the beginning of the year, where we're really focusing on investing at the intersection of the infrastructure, contents, and access points of the Metaverse. So both capturing the Web3 angle, but also the mixed reality XR angle.
Nice. James, over to you.
Yeah, so nice to meet you, Evgeny, and everyone else on the panel. This is James. I'm from Brinc. We're a global venture accelerator. Earlier this year, we were funded by Animoca through our Series B round to really work more Web3. And so I'm the associate program manager for the Sandbox Accelerator program.
Nice. So sounds like you guys are pretty deep into that space. So on my end, I run 37 Capital, which is a DeFi yield fund. So we provide liquidity on chain to generate yield. And lately, we've been spending more and more time with metaverse-related assets because obviously they're becoming more and more financialized as time goes by. So it's exciting to talk about this now because metaverse as a concept has been around for a while. Recently, Meta laid off a bunch of people. And when I talk to my friends who are outside of crypto, they still don't really understand what metaverse is. Some view it as a Ready Player One movie. Some view it as the next Facebook. So it would be great to start with understanding what metaverse means to you guys and how you think about it. So we can keep it all very, very casual and chilled. So David, maybe you can kick us off, and then you guys can jump in with your thoughts as well.
Yeah, I think it just when we're living in a digital first world, right? It just pretty much all assets, everything that happens within sort of the virtual world, consists of really what the metaverse entails, right? So I think anything from just assets within the metaverse, with whether it's real estate or digital collectibles, are all sort of investable assets, right? But other than that, I think it's a whole interactive experience that every single person will be able to experience within the metaverse, and that sort of experience creation and curation has a lot of sort of investment opportunities as well. Whether it's allowing people to play a lot of these sort of instead of controlling a controller and a virtual character in a game, a lot of times you're just yourself, and then you're able to mobilize a lot of what you want to do in the new world and be able to create new reality, right? So I think that's how I see it, and would love to hear the thoughts of others.
Yeah. For me, I mean, you said similar words, digital first world. To me, they're also like the digital native world, where people care just as much, if not more, about the digital world than the physical world. And I think a lot of the early iteration of the internet, they were more an auxiliary tool to enhance our physical lives, like you buy shoes, physical shoes online, right? It's a convenience, but it still ties back to the physical world. With the metaverse, it is a digital native world where you're doing things completely digitally. Like you might buy digital fashion outfits completely digitally, right? You might buy digital real estate completely digitally, and there never is a physical counterpart. And to me, this also ties in with Web3 metaverse are a little bit different. Where metaverse itself, I think has been around for a little bit longer than just the Web3 angle of it, because you had, I think, social networks to a degree and gaming to a degree were metaverses, even if they were centralized. Because ultimately, when we look at how much time people spend online, we're facing this trend where people are now spending more time in the digital native world than they spend in the physical world, right? And so I think that's the real big trend to play, and also the big investment, where the metaverse is becoming probably larger than the physical world, both economically, time spent, transactions, and so forth.
James, what's your take on this?
Yeah, I mean, I have to totally agree with David and Felix here. I really think an article sort of written by I believe it was Wired at the time sort of mentioned that we could replace the word metaverse with cyberspace, and sort of all the conversation would still work. I do to a certain extent agree with that. I just believe that, um, as Felix mentioned, it is a bit more tangible. Obviously, the focus has been towards more of the AR and VR experiences relevant to making, I guess, the cyberspace more tangible. But it is, again, beyond that. It is sort of um, society moving towards a more native, I guess, digital lifestyle as compared to one that is predominantly led by a physical one. So the metaverse is definitely interesting, given that it is it is almost sort of the tangibility of data that we see, um, that gets transacted on a day to day basis, which we haven't seen sort of more in the physical realm.
Makes sense. And one point here that really resonates with me, I think it's the value that we assign to things, right? Because to a lot of people, their Facebook account is more valuable than a car, right? And whether it's a business or an emotional attachment. So I'm curious. So where do you, as metaverse investors, where do you draw the line, right? Because yes, we're spending time digitally, but we're doing it in Web 2.0 and in Web 3.0 and eventually, 4.0 or AR, VR. So how do you think about this? Would you invest in the next Facebook that is not being built on crypto rails, hardware, software? Like, I'm curious, how do you think about it, and what is metaverse and what is the old way of doing social media?
Well, kind of like I guess the framing that I took earlier, to me, like social media in a way was Metaverse 1.0, except it was very centrally owned. I think the thing to really focus on here is like, are you actually capturing users? Are you actually capturing attention? Because I think that's something that Web3 has been really awful at in the past few years. Is that we built so many primitives, but then maybe it's 300 users, but $1 billion market cap, right? And that's even what some of the first decentralized metaverse place, whether it's Decentraland, Somnium, Sandbox, and so forth. I mean, they've all come under fire for having a lack of users, and so. I do think it's super important from an ethical perspective that a future metaverse, or at least the infrastructure, the rails on which it's built, is decentralized, because I think none of us want to live in a Facebook-owned world or Meta-owned world that is just as economically important as the physical world. I mean, that's at that point you're becoming, a really more nation state than anything else. And I do think it's appropriate to look at metaverses as nation states. But that being said, for me, it's really important about like, how are you actually capturing users? What are the organic activities that they're doing, or are they just being incentivized to be active on those platforms?
So then, speaking about users, what is the size of the metaverse market today? And again, I guess depending on different categories, right? Whether you classify Instagram as metaverse or not, obviously. But I know, James, maybe you have a take on this, given that you're potentially pretty close to some of these multiverses.
Yeah, for sure. I mean, I think really sort of, if we were to draw sort of a parallel from the Web 2 world or from the Web 2.5 world, just doing a quick search on Google, there are 37 million channels on YouTube. Obviously, that doesn't equate to 37 million people, but really, what the Sandbox and Brinc have been really interested in is the open metaverse and the potential of this user generated content coming through through the internet and through Web3 to reach the masses. And if you just look at YouTube with their 37 million channels, potentially that's 37 million people that could be onboarded onto the metaverse, creating their own content. And I think that's sort of really the difference, where content was centralized originally, starting with TV broadcasters. We've slowly moved into the YouTube, Twitch, and now we're coming to a phase where everyone is starting to think about different methods or platforms to be able to create content and essentially sort of disseminate that content through interesting means, I guess, beyond video or radio, for example, if we're talking about Web 1.
That makes sense. And David, obviously, with your kind of lens through hobby, I'm sure you would have witnessed the whole Web3 and crypto market maturing as with the width of use cases, business cases, and all of that stuff. So how do you think about what is Metaverse for you, a crypto thing and a Web3 thing, or is it a mix of everything? And what's the difference between Web3 more broadly and Metaverse?
Yeah, I will say it will start with a more of a Web3 angle. Like obviously, when you think about my time at exchange at Huobi, I was there for 4 years, and Huobi as itself as an exchange grew massively throughout time, right? So when it first started, it also only had tens of thousands of users at its infancy, but over time it grew to over 10 million users. So even though like Huobi itself as a platform is very much like a Web2 type exchange, but most of the users on Huobi is actually fairly Web3 native. There's a lot of primitives within the exchange, whether it's staking or whether it's like you can really use a lot of the derivative products on there that you really have to understand Web3 as a whole to be able to execute. So I think as the exchange, it played a role into giving access to pretty much every single person on the planet access to cryptocurrency, right? It's kind of a facilitator to allow cryptocurrency to be bought, to be used, and also to be transferred amongst peers, right? So that's, I think, one way to facilitate things within the metaverse, I guess. And why I'm so bullish on gaming as a whole, right? So I think, ultimately, a lot of the newer gaming primitives will be metaverse focused, right? It's no longer fun, like, as I mentioned earlier, like you controlling a random character that you've made in sort of a video game, but more so that you are more like kind of like the Grand Theft Auto type of game where you're sort of acting as your own, right? Even though you create your own skins and whatnot, but more or less like you're able to live a whole different reality, right? Like you're able to take different type of risks, like stealing a car or robbing a bank, things that you wouldn't be able to do in real life, but you're able to do.
You could try.
I mean, yeah. So I think a lot of these high risk, highly sort of criminal activities that is very much forbidden in sort of the real life setting, you're able to attempt or like experiment a lot of it with in a virtual setting where it's all fun in the games to start. But eventually, like that will be a whole immersive experience as well, right? Instead of like going to the supermarket and buying sort of groceries or going on Amazon and shopping for your appliances, like you can just go into metaverse in a more virtual setting and really look at and feel sort of a lot of things that you're buying as well. So I think a lot of real life and virtual life will be intertwined, and sort of, I guess the biggest and quickest way to get there is really through a gaming concept where it's like, users are sort of drawn in with something that it is fun, engaging, but at the same time, allows them to experiment with a lot of sort of Web3 concepts that they're then able to take away with and really, build up sort of their tolerance of what Web3 is all about.
And when you say gaming, do you think of it as a kind of an individual game, or do you think of it as a open world where, you and I may be driving a car, but I'm playing GTA and you're playing Need for Speed, right? So is it like a one universe for everyone, or is it a bunch of different games which are just interoperable?
Yeah, I mean, I see gaming as a very sort of interoperable world, right? Right now, I think the biggest problem by far for Web2 gaming is that each and every individual game is very siloed away from each other, right? There's no real interaction between one game play and another, and there's nothing that you can really inherit from, what your accomplishments within one game versus the next, and also any sort of things that you buy within one game cannot be used for the next, right? So I wouldn't say that we're at a point where we can be in sort of the open world where everyone interacts with each other, we just don't simply have the technology and bandwidth to allow us to do that. But I do see a world where you're playing multiple games, where you're interacting with multiple people in sort of a multiplayer format that people are then able to engage each other in different game settings, use different toolings that they're able to use from one game to another. And I think that's also like easier for a gameplay standpoint, right? Like a lot of sort of the gaming interface can be open source, in that like you don't have to start from square zero to start a new game, or to even build a new game, right? A lot of this I think can be compounded upon each other, and like anything that's built for one game can be used for the next, and like any sort of accomplishment that you do as a player in one game can be used to the next. Like a lot of this can then allow you to have a more immersive gaming experience that can really engage and retain the user base better, right?
That makes total sense. And Felix, so you mentioned you kind of expanding your hedge fund business to also do stuff in metaverse, right? So presumably you approach this with an investment mindset, kind of metric heavy, business logic heavy. So I understand how Rockstar Games makes money, right? They sell their game. It's a very self-explanatory model, right? How do businesses make money in metaverse? Do they run a virtual stand where they sell you virtual T-shirts? Do they monetize the whole ecosystem? What business models are you seeing, and how do you define success at the business level for someone in metaverse?
I mean, all very different, all very unique to what they're doing. I can give a couple examples, from one of the companies we backed, DressX. They're the leader in digital fashion, so they make money by selling the digital goods, whether it's as NFTs or as Web 2 kind of like digital fashion items. They do brand partnerships where maybe a Coca-Cola and Adidas pays them a lot of money. So that's how they make money. On the gaming side, we've got a couple different game development studios. One decided to sell their game, so they just went live on Steam, and they are on November 17th, and so they make per unit they sell. Others on the Web3 angle, they try to make it more free to play, and they'll monetize VR NFTs, in-game goods. They are going to launch a token, right? So there's also going to be some of that, where what we're discussing now a lot with our gaming companies is that tokenization should really be used more for incentivizing user-generated content, UGC, because that actually creates value for the ecosystem rather than just playing. Because if you and me play a game, like let's say, for example, Axie, that's what the fallacy was with a lot of these games, is that if you and me play a game, that does not create value for the ecosystem at large. So why should we be paid equity, so to say, right? And so tokenization that incentivizes UGC, whether it's mods, maps, quests, other kind of content that actually makes the economy more valuable. Others are doing things like, for example, virtual concert infrastructure, where every time somebody wants to host a festival on it, they charge a platform fee, just like a Spotify, Live Nation, and so forth would. And so there's all kinds of business models that you actually can take the physical world analog that can be translated over to the digital world. And of course, there are some more innovative things too that Web3 enables, like for example NFTs, like for example using more digital goods and like access and ownership. The only caveat to that is that I think a lot of these new models that we came up with last year as an industry, they're now getting challenged, right? Like from things as simple as secondary sales no longer necessarily paying a royalty, which a lot of businesses were literally completely based off, right? And so if you completely build a business model on getting secondary revenues, well, that's kind of gone now, at least it's getting challenged. And so, I think with crypto, that's something I've learned over the last, 6 years in this industry, 7 years in this industry, that it's always a pendulum. We always zig and zag. We always go completely the opposite way of like how things used to be done. And then kind of like the hard way, learn, okay, some things were this way for a reason, same things observable in DeFi. But ultimately, we still end up a little different than the traditional space was. And so I think that's where the real innovation comes, is being open-minded, being willing to make mistakes and break things, but ultimately still making progress as a result.
Makes sense. And with regards to the in-game items, you kind of have people speculating that the specific monster in Axie will be very valuable, or a sword, or I don't know what else, right? I remember looted from whatever, a year and a half ago. But the whole point of gaming is that it should be very accessible, right? So do you believe that these in-game weapons and other items can never be 10x in value?
They're actually touching two different issues there. One issue that most of my game developers agree with is that items that impact the success of the game should not, or items that affect your effectiveness of playing the game should not be for sale. Why? Because then you simply turn every single game into a play-to-win game. Sorry, pay-to-win game, where you just buy the most rare sword, you buy the most expensive axe, and you're going to win every single game, right? And that kills competitiveness. And while that is a quick, successful cash grab, which many mobile games have done, it does usually lead to a sooner death, right? And so what most of the game devs say, like, when we sell in-game items, it's really more for aesthetics, right? So it could be, for example, like it could be skins and so forth, but also what's getting explored more and more, which makes the difference between games and the metaverse, is that many of these have their core game, right, their core game loop, but then they're also building social experiences all around it, where that doesn't impact the core game loop, and so they can sell mini games within that social space. So, for example, one of our companies, XLab, they have a game called Veil, which is a first-person shooter, but then you have an armory where pretty much before the games, after the game, you hang out there, you can play chess, you can play hockey, you can play all these things, and those are small upgrades and things that they can sell, where again, it doesn't impact the core game, but it still adds fun value and so forth.
Good. And technology, right? So it's been identified as obviously an existing issue. So, James, with your hat on as someone from the accelerator world, how do you think about tech? When will it be ready to go at scale?
Well, I mean, that's always an interesting question, isn't it? I mean, we're seeing in the news every day of interesting tech coming up, especially more recently with the Chat GPT coming out. Well, everyone in our office is currently playing with that. Well, we've been playing with it the entire day today. So it's really mind blowing where tech is and where it was just a couple of years ago. Obviously, as someone with a bit more game dev background, if you just compare Unreal Engine 4 and 5, sort of the level of technology there is mind-blowingly different. The applications that you can build on top of that, it's getting there. But I think as Felix mentioned before, we are a little early, both on the software as well as I'm more of a believer that we are slightly a little earlier on the hardware side of things. We are slowly getting there, obviously, with Meta working on their Oculus headsets and other companies out there such as Unity, Niantic. These guys are working on the AR technology. It's something that we'll see almost on a daily basis, on a weekly basis of interesting technologies come out. It's really just applying them in the right scenario, such that it makes sense for the average user to start using them. I mean, it is very cool, but to a certain extent, it is very gimmicky. Given that, for example, I own an Oculus headset, but I maybe touch it about once a month. There is sort of a level of barrier that for the average user, they have to get sort of over that. Firstly, from a hardware perspective, but also from a content perspective, a software perspective, where there just isn't enough in the market right now as compared to if I just load on Steam. They just had their sale. I bought a whole bunch of games. Now I have a bunch of games sitting in my library just waiting to be played. That's not there yet for a bit of the more frontier technologies. But I think as we move forward, and with the speed of tech development growing so quickly, we should see a lot more interesting developments, whether that be on the software side, with more AR or XR experiences, or also on the hardware side with a bit more wearable or I guess wearable technologies. And I think one really key buzzword that we hear almost on a daily basis at our offices is that phygital link. How you sort of connect the physical world to the digital world, and obviously there is a lot more tech going into haptic responses as well, so that you can really feel things that you're touching on a digital level, in the physical realm, and that's
Hey guys.
oh, hello.
I just joined.
Hey, Miko. Yeah, James, finish your thought, and then Miko.
Yeah, no worries. Yeah, no, I think that sort of wrapped it up well for me. But yeah, really interesting for developments in the tech world. So yep, I'll pass the mic to
Yeah.
Miko.
Yeah, hey Miko. Yeah, thanks for joining. Yeah, if you wouldn't mind introducing yourself, that would be great.
Yeah, that's fine. My name's Miko, and I'm with Gumi Cryptos Capital. So we're an investment fund. we're I think we have 2 blockchain funds, 3 game funds, and a VR AR fund. So I think we have kind of a metaversal aspiration.
Mm-hmm. So that's well, seems like it's a good fit for the panel then. So we have one question from the audience which we can ask you, Miko, to address. So we've kind of discussed that metaverse is kind of its own thing, where it's early days and so on and so forth, but very promising. Will it exist completely separately from the Web2 gaming, or will they merge? Will these two worlds merge somehow, and you can kind of opt in, opt out to be in the metaverse? How are you seeing kind of all of this coming together?
Yeah, so I think the word metaverse is not great. I think I'm much more fond of this concept of transmedia. I think that the integration for transmedia will probably be NFT/blockchain, right? So I think really transmedia. So what I mean by transmedia is that when mobile came by and mobile gaming came by, people didn't stop PC gaming. And when movies came by, people didn't stop reading books, right? So there's never a medium where people stop doing what they used to be doing, right? So like everyone will keep doing what they've always done. I think the concept of transmedia is the concept of really how do you then have an integrated experience, right? And I think things like asset ownership can give you an integrated experience, right? So you have an asset, and whether you're in a whatever format you're in, that asset is retained, right? And you can basically have an experience of that environment and of that ownership, right? So I think one of the things that happens in transmedia is really this concept of IP franchise, and the IP becomes kind of a really long-lasting platform, right? So that's different from how it is now. Now it's like a hit game. You join a universe, the game basically is unable to retain users, and then it just dies, right? Whereas I think that the goal in the future will be to develop these durable, long-lasting transmedia franchises. I think Bored Apes is trying to do that. Anyhow, I'll keep my comments there.
So as these franchises emerge, right? So and I'll just throw it out there as an open question, right? So as these franchises emerge or about to emerge, what do you look for as investors, right? What are the signs and the signals that something can be durable and lucrative? So what do you look for in those types of businesses, and is it radically different from what you would have looked for?
Yeah. So one of the clues to IP is to look at the top IP franchises in the world. So if you look at the top IP franchises, the number 1 is Pokemon, number 2 is Hello Kitty, number 3 is Mickey Mouse and Friends, and then Winnie the Pooh, and then below that it's like Mario, right? So if you look at the franchises, the top 5 are all cute. Below that, you have actually Star Wars, and then you have Marvel, right? So if you also if you look at the top IP franchise, if you look at the top 7, it basically goes Japan, Japan, Disney, Disney, Japan, Disney, Disney. So that's the ranking, right? So those are all some interesting clues about where global IP comes from. But I think we definitely look for things that are cute. I think they have mass appeal. We think the mass appeal thing, it's probably going to skew in the direction of like multi-platform. So it's probably going to be more like Unity rather than Unreal. Those are just the some different ways to look at mass adoption.
Anything to add, guys, in terms of what you guys look for? David, Felix.
I guess just on last comment, I personally lean more heavy on the Unreal side. I think there's and also to touch on something with James. James mentioned VR a little bit. I think there's a lot of technological innovations that are currently happening real time that will enable both that medium and also high fidelity at a much bigger scale. Cloud rendering is coming a lot closer. A lot of our portfolio companies are working actively with NVIDIA, Meta, and so forth on getting cloud rendering, cloud streaming rolled out, which would enable anybody, even with a lower fidelity headset device and so forth, to be able to access high fidelity gaming that for example like Unreal Engine 5. Top that comes technology progress like 5G, which will also support that. And so I do think that I think people are underestimating the potential for XR, particularly as it comes to VR as well, because I know it's been a very lackluster medium for several years now. There was a little bit of a hype back in 2016, 17 when the Quest came out. There's some funding that happened at that time. And most of those companies didn't really get that much traction, because ultimately I think the amount of headsets shipped as of right now is like 35 million globally. And then if you want to run something high value, you also need a gaming computer, which means the TAM for that is even smaller, which means the biggest Steam VR title, which is Pavlov, has about 1,000 concurrent users, which really isn't that much, right? But I think a lot of those unlocks will happen when you have cloud rendering, which means standalone headsets can handle those kind of things. And then also as these standalone devices become better form factor, right? We've already seen how we've gone from like an Oculus Rift of that size to an Oculus Quest of that size to now the new Quest Pro. It's pretty slim, it's pretty light, and also it's much more secured on your head, where if you do fitness or an active gaming, it's not as clunky. And so I think we're maybe 2 more iterations out from something that is truly mass market ready. Not the least of which is that Apple had the leak a couple of days ago that they're working on their XROS, which means that Apple will likely enter this space as well. And if I've learned anything from Apple in the last 10 years or so, is that anytime they tackle a new medium, they help it go mainstream, right? Whether that was the iPad, right, where initially we already had tablets with styluses, but nobody used them. They brought out the iPad, and they hit record numbers. We've had cordless headphones, right? But it was the AirPods that really made them go mainstream. And same thing with smartphones. I mean, there was BlackBerry before iPhone, and it was this device that maybe lawyers used, but it wasn't really mainstream. And then iPhone came out, and all of a sudden everybody has an iPhone. And if the people that don't have an iPhone, they have something that looks like an iPhone that came shortly after. And so I think if Apple enters the VR space, I wouldn't bet against that segment. Plus, it's not just Apple. You've got Apple, you've got Meta, of course, you've got ByteDance with the Pico 4, you've got Sony with the PlayStation VR 2 Q1, you've got HTC coming out with a new Vive. And so there's all these big tech companies that are betting on VR. And so even though it might not be a 12-month trend, I think it's something to pay attention to for the next 3 years or so.
Good. And David, what are the key signals that make you excited when you see a metaverse or a gaming project?
Yeah, I mean, I think we're, as an investment firm, still very much founders first, right? I think it's like, how is the founder able to think about the way that they're able to capture market share in the current meta, right? So when we think about, the addressable market and also what the landscape will look like, will be vastly different from, what has been done prior, right? So I think having the ability to be forward thinking, having the ability to pivot when needed, but also having the understanding of what's happening right now and what could be trending down the road, right? So a lot of that, speaks from their prior experiences, what they've done before, that really allows sort of that translatable skill set to be doing what they're looking to build right now. But again, still very much founder first. We love working with the founders directly. Maybe sometimes the best idea takes time to really shape out, but again, I think it's really the talents of the founder that impress us the most.
And James, with the acceleration mindset, do you focus on any specific themes within that are kind of a strategic fit for for yourself and for your investors, or is it very much a kind of a fluid concept?
Yeah, well, I mean, I think the thesis evolves. It is definitely an evolving thesis. That being said, we do sort of ground ourselves towards 2, I guess, core arguments. The first one being more content for the metaverse, and then the second one is really technologies that will help scale out metaverse adoption. One thing that we are aware of, and a lot of people, especially those building metaverses or building for metaverses, are realizing, is that we may very quickly run into a situation where metaverses or metaverse platforms launch, but there isn't enough content, thus creating an empty metaverse problem. And so, really, technologies, and that is really one of those key reasons why we are so hyped about generative AI technologies, is that they really fill a void where originally a very unscalable model of having a team needing to build out whether that be on Unreal or Unity or for the sandbox on Voxeta and GameMaker, to build certain experiences. Now we're moving into a model where we can plug in certain parameters, and essentially a program could generate entire metaverse or entire metaverse environments or experiences for us. And so that's really something we are very keen on. Again, we're not there yet, but I believe that really we are looking for companies that feel they are sort of working towards that. And we have definitely seen companies slowly moving or working towards that model. So it is definitely very interesting times.
And how do you guys think about the upside for yourselves as investors, right? So, Miko, you mentioned that you run blockchain funds, you run gaming funds. Uh, is there something special for you about Metaverse in terms of how you see the upside?
I mean, I guess broadly speaking, like metaverse is a theme. It's a big tent, So what I mean by that is there's a ton of everyone calling themselves metaverse, whether they, have a meaningful, thing or not. I would say when you look at the power law distribution of metaverse, it's really going to be very steep, right? The curve will be very steep. So I think there will be some big winners, but I think there'll be lots of things that don't work, right? So I think we're in a very experimental time. So when I reason about kind of the return dynamics, like it's definitely sort of swinging for the fences, we're looking for kind of Disney of the metaverse type of plays. I think we invested in Bobob Studio, which is kind of Oscar nominated VR AR content, and sort of former Zynga executives, and so really that's the kind of quality that we kind of look for, because we think that there's going to be a lot of really long tail stuff that will get pretty flattened out, and I think things like generative AI will flatten the long tail even more. So I think the winners will win really big, but there's lots of other non-winners.
Felix, David, do you share the same view that it's kind of a winner-take-all environment?
I wouldn't say that it's a winner take all, but I think anytime when we think about metaverse, right, or like what that entails to be, everyone really has a slightly different answer and what their sort of imagination or what the future looks like. And whenever there's sort of uncertainty with what is going to happen, that's where the upside lies, right? Because there's still so many things that's yet to be built out that haven't been built out, so that there's plenty of investment opportunities. And once it does, that's where the monumental upside and sort of gains come from. So I think at the end of the day, right, like upside is only equivalent to like how much things haven't been done yet that need sort of investor funding to be able to help them ultimately get there, right? So
Yeah, and I would add also that there's a difference between metaverse content and metaverse infrastructure. So I would align when it comes to the content side. I don't know how would last year, hundreds of the Web3 game studios got funded. All of them are going to succeed? No, of course not. There's even a high probability chance that virtually all of them are going to fail. Because many of them have insane burn rates. Maybe most of them don't have live games yet, right? So content is very tricky. Plus, then the question becomes, are incumbents going to take over that segment as well? For example, like you said somebody ex Zynga, ex Ubisoft, and so forth. Like, will incumbents come in, or is it going to be more like DeFi, where it's completely new mindsets, completely new approaches that win that segment? But taking that all aside, there's also a lot of metaverse infrastructure that I think has a more reasonable risk return rate from the angle that there is that not significant. Well, there is significantly less risk than just betting on an IP. And on top of that, they still have meaningful upside, right? So, for example, one of the companies we backed, Shapes XR, they're like the Figma of XR. Like it's prototyping tools to create apps in XR, right? Where they already have market dominance, and it's not like an IP where it's like, will people fall out of love with the game? No, as long as the tool is useful and valuable, they'll keep using it, right? So it's a little bit of a different dynamic. And so I would say one can balance that risk reward profile of a metaverse fund by weighing those two. How much infrastructure are you doing and how much content are you doing?
And jumping on the point about DeFi, because something I'm very curious about, is DeFi, at least in the previous cycle, was kind of the biggest steamroller that got us, through DeFi summer, right? Then we have NFTs and so on and so forth. So for Metaverse to be successful, does it need to be composable with DeFi and existing Web3 financial infrastructure? Or could this be completely isolated universes which don't really touch each other?
I think it's kind of not an either or. Like what I mean is that explicit composability. There's definitely experimentations like DeFi Kingdom. I talked to a game called Stable Battle that uses stable coins. So like there are these super explicit integrations. Like I don't really think that makes a ton of sense for the mass adoption user, right? Like really to be actively doing DeFi inside of a game environment or integrating. When you talk about integration, it's sort of like, are banks integrated with shopping malls, right? Like they're not, right? But do shopping malls use banks, right? So like in a sense there's, so DeFi could be looked at as sort of a financial system, for the metaverse, but that they're kind of working together without explicit integration, right? So I don't think there's a need for, like, I would say the only kind of explicit integration where would be necessary would be things like a wallet exchange metaverse, right? So like, you want to have one common user experience where you can exchange items, across games and environments, right? So that feels like an integration point. But beyond that, I think it's a largely non-integrated phenomenon. That's the way I would see it.
I would say more integration can be better from the angle. I've seen too many Web3 games. They say like, oh, we're going to launch our own NFT marketplace. We're launching our own exchange. We're launching our own layer one blockchain. How many games have their own layer one blockchain? And kind of defeats the purpose. Where then you're not there's no way that layer one is decentralized. You probably just paid someone to host a couple servers yourself. And then you're really not Web3. And then you're just a normal game, and the quality definitely doesn't stand up to normal games. And then you're just a 2D browser. And so I think the more, like, the angle I would tell founders to look at that is like, how much existing tech can you use without having to reinvent the wheel yourself and maintain yourself, right? So if you don't need to make your own DEX, but you can use Uniswap, go for it, because that will keep getting maintained, that will keep getting audited, that will keep getting improved, versus you trying to do on your own. The only thing that speaks in favor of games, for example, doing their own NFT marketplace, which has been happening, is they want to save fees, right? But then I would ask, like, how are you saving marginal amount of fees versus the amount of money you're now expending to build this on your own? So yeah, I would say it's really more a cost benefit analysis for them to decide whether or not they want to integrate or make their own version.
Yeah, I'd just like to add to this. I think it's a really interesting viewpoint because alongside running an accelerator program, I also founded my own blockchain gaming company, and I guess to sort of to defend sort of a lot of games out there, and perhaps sort of the rationale behind trying to build our own things is it's because it's very different, especially if you compare it to traditional games. I would say almost 95% of the games out there, multiplayer games, have this Chinese wall between the in-game economy versus the real world economy. And this is something that probably comes up on our docket every day in terms of what are the potential effects if we try or if we, given that Web3 has broken down these walls and now we have assets that do engage or that do hit the real world economy, how that affects really the effect of the game. And at the end of the day, people want to have fun. Developers don't want to be in a position where they need to think about whether they could build something because they have the concerns of the real world economy around it. That being said, gaming companies and a lot of studios that are building Web3 games should definitely have this in mind. That is one thing that I do see that is quite lacking. I'm jumping in between roles here right now. Game studios definitely do sort of need more than your traditional game economists. I do actually, whenever I speak to a lot of founders out there, I ask them, have you spoken to a central economist? And usually they go no, because they don't really like, they sort of go like, oh, our game economist knows everything. And I'm like, do they really though? Like what happens if someone sort of just floods the market and they're like, oh wait, et cetera, et cetera. So it's interesting. I understand why a lot of games want to build up their own things, just because they do want to contain situations, rather than completely let it go. But I think that's really more of a matter of the maturity of the market. We are still very early, especially with DeFi. It is one of those sectors that I am very bullish about. But it is something that people need to understand, that really Web3 gaming is not about trying to make a profit. At the end of the day, gaming is about having fun. And that should really be the main value drive in terms of why you want to onboard users. It's really not, the pitch shouldn't be play our game and make money. It should be more about play our game and have fun. But hopefully you can transfer these as you wish to.
That makes sense. And thinking back, I would have rather much studied, gaming economics rather than microeconomics. So yeah, that would be more.
I did want to comment a bit on kind of the horizontal technology versus the vertical application or game or IP, right? Which is, there is a relationship, right? I think, to me, when you think about how this happens, right? I think one of the problems with, so-called infrastructure is that oftentimes infrastructure actually comes along when there's a hit game, right? So if you look at the Epic Store, it's basically Fortnite, right? And I think what happens is that primitive stores like come out of launchers. So if you look at like the Riot launcher for League of Legends, it just has other Runeterra games and then Valorant, and so what happens is that if you have a hit game, then you kind of earn the right to launch infrastructure. I think in blockchain we saw that with Axie Infinity launching Ronin. I think that's a case where it's sort of super duper amazing game team, wonderful culture, great company, Sky Mavis, great human beings. They maybe underestimated the complexity of securing layer one, for Ronin. I think the another case study is Dapper Flow. So like Top Shots, obviously Runaway IP success through a license with NBA, and so they launched, the Flow blockchain, right? So, it doesn't have to be a blockchain. It could be an app store, it could be an identity system, could be a wallet, it could be anything horizontal, right? But in a sense, there's a relationship between horizontal and vertical, right? So in a sense, like the thing that I think we're objecting to here is if a game isn't a hit game and they're trying to build their own blockchain, they're not really in a position, they're not in the position, they don't have the economic might to launch something horizontal. They may not have the technical skill, right? But like there is a relationship between the vertical and the horizontal.
So to your point about making things kind of accessible, inclusive, we have an interesting question from the audience that the person kind of sees a big divide in the internet and the metaverse, and they're trying to understand how metaverse can be made more inclusive for those who live in the rural areas of emerging markets and not necessarily just in the developed economies.
Yeah.
I can speak to this.
Go ahead,
Yeah.
David.
Yeah. So I've actually traveled quite extensively to a lot of the emerging markets. For example, I was in Africa, actually right after our panel at Cornell, Miko.
Nice.
So I was there for about a month in April. I was in Southeast Asia for a little bit over a month in August, and also parts of Latin America earlier on last year. I think it's the ultimate concept of really the metaverse presents with a lot of these rural dwellers a different life experience than what they have in the physical world, right? In the physical world, they're probably doing a lot of manual and hard labor, but in the metaverse or in this new virtual world, it's just like there's no really hard manual labor to be done, right? Everyone can really experience a whole different set of experiences that they otherwise wouldn't be able to envelop unless they go to like a very much more developed country where a lot of these entertainment attractions and things to do exist. So I think really the metaverse gives them life upgrade, as they say, in terms of they are able to then really live their life to the fullest in the metaverse, but really sometimes having to go back to reality in some of this manual labor fashion to pay the bills and et cetera, right? So I think that's one thing that, provides a vastly more inclusive environment when we're talking about the metaverse to a lot of these developing countries where they don't simply have the same level of access as we do in living in a lot of the more developed countries. And also, to touch a point on what you guys mentioned about earlier, is how gaming can integrate with a lot of the different other verticals. Is that I think whenever you gamify something, you make it easier for people to really enjoy what they're doing, right? So I think a lot of that can also extend itself to more educational purposes, right? I think when DeFi Kingdoms came out, or a lot of these newer gameplays that kind of envelop other sort of industries, is that it makes it easier for people to learn something, right? When we talk about children's books, or we talk about sort of early fundamental basic math, right? A lot of these things are sort of gamified concepts where people are playing a game, but at the same time they're using it to really educate themselves and also just learn from sort of that environment, which allows them to it allows them to, I guess, absorb information in a much easier format, and they're able to really enjoy what they're doing, which then allows them to learn easier and faster as well.
I would love to build on what David said. So, last week I was at, Art Basel, and obviously, like, this is a complex thing, right? Because obviously we're talking about inclusion, and I'm now talking about sort of a exclusion, right? In a sense of who goes to Miami and whatever. But I was having dinner with Gabby, who's the CEO of and founder of Yield Guild, right? And Yield Guild in the first gen play to earn actually got a huge upswell of players, in the Philippines that were actually, earning money, right? So, in a sense, like, there are ways to connect kind of the classical sort of Web2 attention economy to the Web3 transaction economy. I think the way that this kind of play to earn mechanism works is that one of the problems with playing to earn, or even step in, like move to earn, one of the problems with those things is that the activities of the people don't generate value for the ecosystem, right? Whereas, like, I think things like user generated content, there's the use of crafting, so people can build items, they can create the metaverse, so I think metaverse builders, I think there's a lot of opportunities for one of the things that happens when AI takes over the art world is the entire scene shifts from art into craft, right? So the question becomes, what does that exactly mean, right? What it means is it means that you want items, but you want, to me, like, there's two fundamental currencies. One of them is kind of skill. So I think skill in the arts will be commoditized by AI, right? So then what do you want from art? What you want is devotion. So you want people who spend a lot of time and care, right? And then you also want relationship, and you also want to connect with people who are more maybe famous. So you want like a parasocial relationship with a creator, right? So I think that it definitely shifts the landscape, right? But I think, to me, because crafting becomes important, people in emerging markets can spend, considerable amount of time building items, and they can sort of provably be crafting and, putting their time, energy, and devotion into objects that I think can be really made very valuable. And I think that's a way that the user's time isn't just spent playing Xe, or isn't just spent, on a pedometer walking around the town, but really are spent on things that add value to the economy. So those are my thoughts about accessibility.
And this creates then the whole economy, a set of relationships where you have a real producing, so to speak, metaverse economy. So to the point of opening up to to the broader world, I see there are some questions from the audience who I think will be pushed live. So I guess we can address them as they come. But maybe in the next couple of minutes or so that we have left, if what would be one thought or one idea each of you would like to leave the audience with in 15 seconds. If you were to sum it up and share, that would be great. And Felix, we can start with you.
Sure. Yeah, 15 seconds less. Yeah, I think the most important thing for people to do is to actually experiment and try things out. So whether that is experimenting with Web3 gaming, whether that is buying yourself an Oculus headset and seeing what's available, what is being built, maybe even trying to create some XR experience on your own. Maybe seeing how could you use AI to create new content, some art and so forth. I think the best thing is to experiment. That way you see what is valuable and what is real, and that will usually lead you to the best, investment decisions, more so than just like reading headlines.
Cool. James?
Yeah, I really think it's about information share, beyond the metaverse, but also in the Web3 space. Read more, listen to more podcasts, trying to understand the space. Even for us, sometimes I get imposter syndrome talking about things where in the back of my mind I'm like, I have no clue what I'm talking about. And really sort of to get over that hump, it's listening to guys like David, Felix, or Miko here, and you have Jenny. So thank you so much for your time. Yeah, keep studying. There's only so much we know as well. It's a daily struggle for us as well. So yeah.
Yeah, I super appreciate the vulnerability. Like, there's always someone you can find who knows more than you, so like there's never, so in a sense, like it's just like levels of a game. Like the game keeps getting harder and harder and you keep getting more and more skillful, right? So like, I think James is absolutely 100% right. And I just want to underscore his message, right? Which is just keep absolutely keep studying, right? Like, and to me, like the thing that the metaverse speaks to, I think, in the human spirit is the desire to explore, right? And the desire to learn and the desire to, and in a way, along with the unknown comes discomfort, right? So like, I think being uncomfortable with things that are new is part of this process, and I think we should all just kind of like go ahead and be a little uncomfortable every day, and that's how we grow.
So, David, to finish off on something comfortable, tell us, what should we be excited and comfortable with?
Yeah, I was actually gonna land with something uncomfortable, but I
Nice.
think ultimately it's just like everyone should experience and live really the digital world, right? So I think as we sort of move to a more digital native world, everything will be magnified, right? So like there's no longer going to be a lot of the off-camera stuff that you do in the physical space that won't be recorded. Pretty much every single action that you ever do in
Wow.
sort of and every day in the future will be recorded in some fashion, right? And I think I do want to get everyone ready for that, right? So whether it's like your on-chain wallet activities, or whether it's like your on-chain governance votes, every single thing that you ultimately do for the rest of your life, once it's becomes a digital native world, will be magnified, recorded, and can come back at some point. Someone can dig it up, right? So I think at the end of the day, right, let's make sure you're a good citizen in the digital world. It's not like, you know, scamming online or like doing things in a virtual format. It will come unnoticed. A lot of that will come back to haunt you. So I think at the end of the day, everyone should be very much delicate about what they ultimately do. But this is sort of the time to really go out and experiment and really try and live that life and see how, because everyone will have to adjust sooner or later. Right?
So the main
Digital
thing
karma.
is I should
Yeah.
continue to behave myself even online.
I like that.
Yeah, thank you guys. I see we have one question from the audience. If we decide to exclude by default, wouldn't we be missing out on the multitude of mobile users in rural
I want to
areas?
jump on that just really briefly, right? Which is, I think this idea of transmedia doesn't include mobile users, right? So, I was pushing for kind of a Unity world, right? So, Unity is cross-platform and mobile, right? And the other thing that I think you want to watch too is one of the reasons Facebook wants Facebook wants Oculus is because Facebook doesn't have a hardware platform, right? Which makes them the attacker, right? But Apple has iPhone, right? So, and Apple has Mac, has tons of hardware platforms, right? But in a sense, Apple Reality Headset or XR, whatever you want to call it, like Apple is the defender, right? So if you look at it from that perspective, it's possible that the iPhone will be replaced by these headsets, right? So, so I think, it is a matter of time. It's a matter of price. It's a matter of volume. And, but I think that, I'm all behind what Idris is saying about, don't leave behind these earlier gen technologies and those users. So I think, I think if we're all successful, then everyone will be able to access this value.
Makes sense to me. So I assume. Sorry, is there other more questions? It's not very clear. Yeah, I see someone just dialed in. Ken or Ben, do you have a question for us?
Hey, hello.
Cool. Hey Ken, welcome. Yeah.
Hi.
to-
Thanks, guys. I think so far a really great discussion so far. So my question, I guess, is like, I guess on the topic of tokenization and assets, right, in the metaverse as well as Web3. What are your opinions on asset tokenization as a general methodology moving forward in affecting traditional investments generally?
Yeah, take it away, guys.
Are you saying real world asset tokenization or like tokenization of in-game?
Well, we can look at it from two aspects, I guess, but perhaps physically as first, because maybe it's more physical. Digital can be pretty much anything virtually as well, right?
Yeah, so I'm personally not a huge fan of like physical asset tokenization from the angle that physical assets still need to be custody somewhere. So whether that is a watch, a necklace, a house, I mean, it doesn't matter. Like all those things need to be stored somewhere. So there's cost associated with maintenance of that, and then on top of that comes. Technically you would need to transfer those assets always at the same time, right? So for example, let's say I sell the gold watch, but maybe I maintain my NFT or my token that represents the watch. Now, do I own it twice? Now I could fake proof somebody that I still own the watch, even though I don't. I just own the token, right? And now there's now new things coming up with, I think they call like is it NPCs? Like these chips that they're putting into NFCs, I think. That they're putting into, let's say, fashion outfits, and so now the token is inside the garment. It's interesting, but personally, I just think crypto is really meant for the digitally native world. Like DeFi just makes the most sense when you don't have the physical counterpart. Same thing with NFTs. We have digital art with digital goods. We don't necessarily need a physical counterpart. So I'm more on that camp. Someone else.
Yep, I guess that's it. There is one.
Yep, thank you for answering my question.
You got it.
Yeah, I see there is one more question from Sebastian.
Yes, hi guys. I think it was one of the most interesting investment panels out of all today. At least very very effective as far as the information given. We have a question. We're a development team with AAA experience, and we're doing a Web 2 MMORPG game, and we're doing it both in Web 2 and Web 3 formats. We see it effective as a strategy to convert the players from Web 2 to Web 3 in the future, because the Web 3 market is great, but it's not as big as billions of players in Web 2, obviously, which we think is the best strategy. What do you think about this opinion? Do you also share the same feeling, or?
Can you define the difference of what that migration from Web 2 to Web 3 is? Like what's the difference in the game, in your particular game, between 2 and 3?
Well, in Web 2 you have gold, right? And in Web 3 you got NFTs and the ability to sell them and to other players, use them on the other markets, and also it will be mixed with the coin.
Got it.
So personally, I think I do think I prefer that strategy. There are, sort of speaking plainly for gaming, obviously a lot of people advocate for Web3 being read, write, and own, but really in the gaming sense, people buy games or pay for games or play games because they want to capture entertainment out of it, and they're like, why should I bother owning this if I haven't experienced the entertainment yet? And it's something that I've been speaking with someone here in Hong Kong recently, but we were talking about it's never too late to launch a game, have your players enjoy the game, and then go, by the way, did you know you can also own your character that you've been playing for the last 2 years? And really, we feel that that's a good strategy to actually slowly onboard users from Web 2 to Web 3, especially because infrastructurally, Web3 systems are still fragile. Um, and so I do think it is a good idea as long as you can justify, or sort of your product has that market fit, from a Web2 perspective, but also from a future perspective, in the Web3 perspective as well.
Yeah. Yeah. Thanks. I don't have any questions. Maybe are you guys coming to the after party tomorrow?
I don't. Virtual? Is it a virtual after party?
In the metaverse, I assume.
Yep, it's organized tomorrow. I looked at the schedule and I see there is an after party tomorrow, sometime in the evening, CST time.
Yeah, sounds fun.
We'll probably
Yeah,
look
now,
at
now we have
that.
to.
Okay,
Now we're on the hook.
there you go.
Cool. Well, yeah. Thank you for your question, Sebastian, and thank you guys for making the time, for sharing your stories and your thoughts. And I guess we'll see you in the metaverse.
Yeah, sounds good.
Thank
See
you.
you guys around.
Thank you.
Have a great
Thank you.
one.
Thanks, everyone. Bye bye.
Bye.